Well, good morning all, and thanks for joining us today. A couple of housekeeping items before we start. If you have a question you'd like to ask, please submit it by clicking the Q&A button at the bottom of your screen. We do have a limited window of time today, so we may not be able to get to them all. A password-protected video of the event will be made available for a limited time to those who have registered. The Australian economy is facing some massive challenges right now, with the government being forced to step in and fill the void. Business owners are looking to the road to recovery with some level of uncertainty about exactly what lies ahead. Here with us today to make some sense of it all is someone with more experience in the workings of the Australian economy than any other. He was the Treasurer of the Commonwealth of Australia from March 1996 to December 2007, making him the longest serving Treasurer in Australia history. He delivered 12 federal budgets, including 10 surpluses. During this time, all Commonwealth government debt was repaid and Australia's sovereign credit rating was upgraded twice to AAA. He instigated and established the Future Fund, Australia's sovereign wealth fund, which currently holds more than $160 billion and has been a guardian of the fund since 2009. He was a member of the committee of the IMF and chairman of the G20 Finance Ministers and Central Bank Governors Forum. After leaving politics, he was appointed a member and chairman of the Independent Advisory Board to the World Bank. Here to provide insight into the economic outlook and the road ahead is the Honourable Peter Costello AC. Thank you, Mr. Costello.
Well, thank you very much, Jonathan, and I hope you can all hear me. It's great to be with you. It would be more fun to be with you in person, but of course, the world has changed, and the world has changed for good and it's changed for ill. One of the good things about the way it's changed is that we can all do Zoom. At the Future Fund, we invested in a startup called Zoom some years ago. I never really thought it'd take off in the way it has, but we can at least thank the coronavirus for making that a very good investment, giving us a very good return. Yesterday I was filming something for the 7:30 report, which they're going to show later this month on the economic fallout. And the presenter said to me, you must be glad you never faced anything like the coronavirus while you're in office. And I said, well, while I was in office, we had the Asian financial collapse of 1999. We had the SARS epidemic of 2000. We had the avian flu. We had the American stock market crash of 2001. And of course, we had 9/11, the attack on the World Trade Center and subsequent wars that Australia was engaged in Afghanistan and Iraq. But we never faced a pandemic. But as I thought back over that, what it reminded me of is that there are always going to be challenges. None of those things were expected. You never know what those challenges are going to be, but the best you can do is have your strategic objectives, follow them through and deal with the problems as they arise. And I think that's not just a lesson for politics. I think it's a lesson for business as well. Who of you would have predicted a pandemic in 2020? None. But to have the strategic objectives for business, to follow them through and to deal with the crises as they arise is really the best ordered plan and the best way of coping with things. This morning, I just want to make some observations on the coronavirus and what it means for Australia. And then I want to broaden the focus a little bit and talk about what this will mean for our region and the world, and particularly what it will mean for the big global players, China and the United States. So let me first start off by talking about a virus which none of us had heard of and none of us expected back in January of this year. It became clear in January of this year that a novel virus had taken hold in Hubei, in the town of Wuhan, in China. And when it became apparent that this had taken hold in humans, this was seen largely as a Chinese problem. All the talk in Australia at the time, you might recall, was flatten the curve, flatten the curve. All the medical chiefs would come on TV and they'd say, what we've got to do is flatten the curve, flatten the curve. What flattening the curve actually meant was that we had to reduce the rate of infection. It's never thought that we could get rid of infection or cure infection, but we had to reduce the rate of infection and use the time that allowed us to increase the capacity of our hospitals and in particular our intensive care units to be able to deal with the patients as they came in. At the time, Australia had 2,000 intensive care unit beds, and the plan was that we would triple that. We'd flatten the curve until we could triple it. So we had 7,000 beds to deal with the expected numbers of coronavirus victims. Now, we have been fantastically successful. We now have 7,000 intensive care unit beds, but the number of coronavirus victims that are in them at the moment, as of today, is 4. 4 out of 7,000 beds that were prepared. We've had 102 deaths, and there are 26 people in hospital as we speak with coronavirus. It's the whole of Australia. So we have been successful beyond all expectations in actually containing this virus. I think there's another lesson we could probably learn, which was a lot of the modelling was probably overhyped. Medical journals predicted that the death back in March, that the deaths in Australia would be between 50,000 and 150,000. The measures that have taken have been very good in containing the virus. But I think some of that modelling, when people go back and have a look at it, will be seen to have been flawed. We will not eliminate this virus. We all sit around and wait until it's eliminated. We'll be waiting forever. What we'll have to do is we'll have to learn how to live with it. Just as we've had to learn how to live with the flu, how we've had to learn to live with other infectious diseases. As I said, there are a few medical cases still in the intensive care units of Australia. But what's now in the intensive care unit is the Australian economy. Because the lockdown has inflicted great cost on the Australian economy. We have lived essentially through an experiment that has never been tried before. Governments, that is state and federal governments, have deliberately closed down their own economies. When I was in government, and all of the history of the last century was governments trying to open up their economies. We have lived through a period where governments, by deliberate policy, have tried to close down their economies. And essentially that began in earnest from March this year. Now, at 11:30 this morning, we're going to get the Bureau of Statistics growth figures for the March quarter. They won't be that bad because the real lockdown in Australia only started on the 29th of March, 2 days before the end of the quarter, when meetings of more than 2 people were banned, and when all overseas arrivals were ordered into quarantine. Governments were enormously successful at closing down the economy. Here's the question: will they be as successful in opening it up again? It might have been easier to close than it will be to open. There are at least 4 states that have closed their borders and are showing, notwithstanding pressure from the federal government, showing no inclination yet to actually open them. The effect on the economy so far has been very uneven. Some businesses have been closed entirely: the hospitality industry, the entertainment industry, travel and tourism. If you happen to be a travel operator, you've been doing nothing for 3 weeks. If you happen to be a travel operator who's in international tourism, you may do nothing until next year. Those industries have been closed completely. Some businesses have successfully migrated. For a few months there, all school education was run online and most university education was run online. That is, they continued operating, but they operated in a different way. We could say the same about retail. Many retailers were able to continue, not because people were coming into their shops, but because they were able to migrate online. Some industries have actually done quite well. The mining industries in Australia have done extremely well. I'm going to come to China in a moment. There has been absolutely no interruption whatsoever in Chinese buying of Australian iron ore, or gas, or coal. We are running a trade surplus at the moment in the midst of this big downturn because our mining industries have been largely unaffected. But we know there is a huge demand shock coming to the economy. Number of people that have been put out of work, who will no longer have money to spend. Number of people who are being maintained on JobKeeper allowances, which are due to come to an end in September. Number of people who've been able to get an allowance under Job Seeker, the old New Start or unemployment benefit, which will also revert when we go back to life as normal in September. And that brings me to my next point, which is, just as it was easier to introduce the restrictions than it's going to be to get rid of them, the government will find that it was much easier to introduce all of these benefits than it will be to get rid of them. Nobody will object when the government is spending more money. Nobody. It's only when the government tries to withdraw that stimulus that there will be objections. The opposition has already said they don't want the Job Seeker to go back to its old rate. They have already said they don't want the JobKeeper to finish at the end of September. Many parents are saying they don't want free childcare to end as it was supposed to, as at the end of this month. And the consequence of that is that our budget will be in deficit for a very long period of time. The government is borrowing money at the moment to fund all of these services. It will continue borrowing to do so because we will be in deficit, and the economic outlook will be higher unemployment, higher deficit, higher debt, lower productivity. When will we get back to where we were in December of 19, before the COVID virus originated, sometime in January of 2020? Well, probably 2 years, maybe 3. In other words, it will take us till about December 2021 to get back to where we were in December of 2019, maybe December of 2022. And that's notwithstanding the extraordinary success that we've had in containing this virus. I want to come now and say a few words about China. This is a virus that originated in China. You would have to observe at the moment that our relations, Australia's relations with China, are strained. It's not really strained because of the virus. They were strained before that. What the virus has done is it's focused attention on how the Chinese authorities handled this outbreak. And there's a view that they were not transparent about it. They didn't share information. They weren't entirely honest about the risk that this carried. And it's that lack of transparency in relation to this episode that has forced a lot of people to say, well, there's a lack of transparency generally in dealing with China. Now, I know China pretty well. I was involved in negotiating our first financial services license, Australia's first financial services license in China. I've known the last 3 presidents of China, Jiang Zemin, Hu Jintao, Xi Jinping, and I led the Australia-China high-level dialogue, which was an attempt to try and improve relations between our 2 countries for several years. There is no doubt that our relations with China at the moment are probably as bad as they've been since the days of Mao Zedong, before we recognised China in 1972. From the Australian side, what worries us is that despite all of its economic development, which has been overwhelmingly good for Australia, China is still run by a communist party. It is a one-party state, and the Communist Party of China is not subject to Western concepts of law. It is powerful and it cannot be questioned. And if it is perceived that something is not in the interests of the Chinese Communist Party, then you won't have a press reporting it, or critics criticising it, or transparency about what's actually going on or happening. I remember one time I was in China and the Australian ambassador said to me, look, the place where you'll be staying will be bugged. So when we need to discuss something confidential, I'll motion to you to go out into the garden and we'll have a conversation out in the garden. We're out in the garden talking to each other. and we heard rustling in the bushes. And the ambassador said to me, "What do you think that is?" And we walked across to the bushes. And there in the bushes was one of the men who'd been assigned to us to be our interpreter, hiding in the bushes in the middle of this garden after we'd gone outside to avoid being bugged. Well, you draw your own conclusions as to what was going on, but it's not normal. It's not the way Western countries deal with each other. And I think from the Australian point of view, the Australian government has been concerned about cyber attacks. It has been concerned about the telecommunications company Huawei being on our telecommunications system. It's banned that company. This has not been taken very well at all in China, and the Chinese have retaliated with various trade impositions like tariffs on barley, and they are determined to exercise their muscles. In the days after Mao Zedong, China was opened up by a leader called Deng Xiaoping, who decided to open China to trade and commerce. And he had a phrase that China should hide and bide. Hide its development and bide its time. I think the current leadership of China has decided there's no need to hide and there's no need to bide. China is now a global power. It is a one-party state. They want to be treated as a global power. They want to be treated with respect. And they also want to extol the virtues of their system. The way they see it, an authoritarian state is much better positioned to deal with threats. They would contrast the way they dealt with coronavirus to the way the Americans have. They would say democracies are weak, they're divided. That authoritarian states are strong. They can deal with things, that the world would be a better place if authoritarian leaders dealt with each other on a bilateral basis, fixed problems, rather than a rules-based system where everybody subscribes to the same rules. And you are watching quite an intense competition go on at the moment between the Chinese and their model and the Americans and their model. The Chinese, for example, would say the kind of demonstration and rioting that's going on in the United States illustrates the weakness of democracies. You wouldn't see that kind of thing on the streets of Beijing or any other city in China because it would be cracked down with a very strong authoritarian hand. What does this mean for Australia? Well, at the end of the day, if Australia has to choose between its economic trading partner, which is China, and its security partner with the United States, it will choose the United States. That much is absolutely clear. It has chosen the United States so that, for example, we have been in the forefront of demanding openness and transparency in relation to an investigation as to how the coronavirus escaped in Wuhan. What will that mean for trade? Well, the Chinese might retaliate in areas where they think we're sensitive. Barley is one area. But they're not going to cut off their nose to spite their face. The reason why China trades with Australia on iron ore is they need the iron ore. They don't trade with Australia to do us a favour. They trade with Australia because we have very well priced, very high quality iron ore. They trade with Australia on oil and gas for exactly the same reasons. And this trade is essential for their development. They will sell back to us manufactured goods, not because they're trying to do us any great favours, but because it's in their interest. They need markets for their manufactured goods. But I think one of the things coming out of this that I hear from many businesses is businesses are now thinking about the benefits of diversification. You don't want to get too reliant on only one supplier. You want to have options. And that's certainly the case for people who are importing manufactured goods from China. If there are options, if you can do, say, 80% of your trade with China and 20% with somebody else, it's better to have that option there. And it's better for countries. And you don't want to overstate it. For Australia, a third of our exports go to China, a third, so 2/3 don't, a third do. And of that third, nearly 2/3 are comprised of iron ore, gas and coal. And as I said, they're bought not because the Chinese are doing us any favours. So I think it's going to be a period of what we call realpolitik, countries recognising their own national interests and protecting their own national interests, doing business where there's a mutual benefit, but not necessarily doing favours where there's not. The final thing I'd like to finish by saying is this. I said earlier that the government has put enormous stimulus into the economy and it's borrowing the money to do that. I said it's going to take us some time before we balance a budget or start paying off debt. People say to me, how long can this go on? And the answer is governments can keep on borrowing money essentially for as long as people are prepared to lend it to them. The Australian government total borrowing now is $650 billion. In the midst of this crisis, the government's had no trouble borrowing money and borrowing it at incredibly low rates, below 1%. So while it can continue to borrow money at low rates, it will continue to do so and it can fund itself. The only problem actually comes when there's a bit of a recovery and people say, we're prepared to keep lending to a government, but we want more than 1%. And at that point, the cost of this borrowing goes up and the interest bill goes up. And that's a constraint on government in a funny kind of a way. As we start to move out of this period of downturn, the costs of the stimulation begin to be felt more and more on the borrowing account. So you don't want to do too much of this. You don't want to borrow $1 more than you actually need. Because even though it's not a problem now, this debt, this $650 billion of debt is going to be with us for quite some time. And in the future, we may have to finance it at much higher rates than we do now. What do I see the outlook? Fantastic success in containing the coronavirus. The difficult part starts now, getting life back to normal. It's the quality of the rebound that's going to count. And those businesses that have used this time to get lean and efficient are going to be the businesses that are going to do best. I'll leave it there and thank you all very much.
That's brilliant. Mr. Costello. Very interesting. Thank you. So I think you alluded to it in your opening remarks, but I guess as Treasury, you've had to deal with a lot of challenges, the dot-com bubble and the effects of 9/11 on either side of your period in government. We had the recession in the early 90s and then the GFC, 07, 08. What is different this time, if anything, and what lessons do you think we can take from those past experiences?
Yeah, you see, I mean, when this started, a lot of people said to themselves, oh, gee, what we should do, you pull out the playbook, what we should do is we should sort of stimulate the economy, give people money. A payment went out of $750 to anyone who was on a benefit or a self-funded retiree, give them some more spending money. And I don't think that was really the problem, spending money. The problem was actually keeping people associated with the workforce. So after we came down out of this, down into this very deep valley, we could come out as quickly as possible. And I think the JobKeeper was the best measure that was put in place. And many of the people on this call who are in business would be receiving it, or I hope they are, or if they're not receiving it, it's only because they're doing better than expected. Maybe their revenues aren't down 30%, and that's even better still. The problem with the JobKeeper is it's due to end at the end of September. If you just closed it down, you'd fall off a cliff again. And so I think the government's going to have to think about tapering an exit from the JobKeeper. Either tapering it by maybe winding it down so it's not $1,500 a fortnight, maybe it goes to $1,000 a fortnight, $500 a fortnight, and maybe tapering it out a little bit. Now, the government doesn't want to say that now, obviously, because once you say that, you'll get under political pressure to extend it even further. But I think that's what we'll be thinking about as we come up to September. Dealing with crises, as I said, who knows where a crisis is going to come. We're all sitting here now. We're dealing with a pandemic. What's the next big crisis? Well, suppose the global superpowers had rivalry over Taiwan or something like that. Suppose Iran succeeds in getting a nuclear weapon. My point is, in the international sphere, even in the domestic sphere, there are always challenges. It's always coming from somewhere. What can you do? Well, all you can do is strengthen your foundations. You've got to be as strong as you can so you can withstand these things. Focus on the things you can control. And that's what I used to say when I was in government. Here's what I'm going to do. I'm going to balance budgets. I'm going to keep taxes low. I'm going to repay debt. I don't know where the challenge will come from, but I know this, that we'll be in a much better position to deal with it if we deal with it from a strong position.
That's very good. That's very good, and I'm sure we'd agree that those lessons translate to business. So the dealing with a $2 trillion economy, those principles, would you say then whether you've got a $200 million business or a $20 million or a $2 million budget, it's just the zeros that change, is it?
That's right. That's right. That's the way we used to do budgets. We'd come in and we'd say, last year our budget was 200 billion. The economy's grown by 4%. Let's grow our budget by, I'd always say by 3%. So it was getting smaller, is it? So ignore the billions on the end. 2 can go to 2.3, and 1 can go to 1.4. It's quite easy when you start doing it that way.
That's good. That's good. So you spoke about the JobKeeper and these other measures perhaps ending at the end of September, and there's lots of talk of a fiscal cliff. We've had a lot of questions coming in about that. So given the temporary support measures that including the bank relief that's scheduled to cease at that point. You know, you alluded to the fact that the government is probably going to have to step in. What would you say about the shape of the recovery curve and what we would expect it to look like, and how much of a part the government's going to have to play in that?
Yeah, well, this is the, you know, people talk about a V, it goes down and it comes back. U, it goes down, we have a long time at the bottom and it comes back. You know, the other graphic that, you know, people are talking about is the Nike swoosh. You know, you go down, but you come back on a more gradual path. The way I look at it, and I think we should be back to where we were within 2 years. I don't know whether you want to call that a V or a U or a swoosh, but it's basically saying we won't have growth that will recover what we've lost until at least 2 years have passed. So we've lost 2 years of increased production. Unemployment will go to double figures, at least 10%, I think. And if it doesn't go to 10%, it's only because of a statistical way we measure it. A lot of people will just drop out of the labour market. But bear in mind, the last recession we had, 1991, it went to 11. You guys are probably not old enough to remember it, but I sure do. We had 11% unemployment. So it's not as if we haven't been here. We have been here before. But it's, you know, it's going to be a difficult couple of years. I don't think the economy will look the same as it looked when we went into this. As I said, some businesses are not coming back. I'll give you an example. Community newspapers. It's already been announced. They're not coming back. They were already being challenged. When coronavirus hit, publishers said, well, we won't print them on paper, we'll still have them digital. And now they've said, we won't bring them back at all. Some retail is not coming back. Some retailers figured out, why open a shop when we can actually sell at a higher margin on the internet? So they're not coming back. And this is what's, you know, often called the creative destruction of business, you know, that one area of business closes and another opens up. If you want my view, I don't think city office rents are ever going to come back to the extent that they were. You know why? Because companies have figured out you can have quite a large workforce outside an office. So why bring all of those people into a high-rise city office block when you can have 30%, 40% working from home? They're quite happy to do it. So some things are not going to come back. Some things are going to come back even stronger. You know, it looks like the government's going to try and really crank up construction. So that's going to come back stronger. And if you're in building materials or any of that kind of stuff, you're probably going to do well. So each time one of these things happens, it just changes the economy a little bit. And the critical thing is to know what your core business is. What do you do that others can't do or can't do as well? Focus on your core business, and make sure that you know, when the downturn passes, you're really, really well placed to take advantage from the upswing again.
That's good. That's good. You spoke about Taiwan, with a lot of questions coming in around the Asian trading position, and that have perhaps before been reliant on China and seeing it as a risk, looking for other markets for sourcing goods, and looking at Taiwan and Vietnam and I might say others the neighbours around China. Do you see that as any less of a trading risk for Australian businesses?
Look, Vietnam. Let's take Vietnam. Vietnam is a communist state. So you know what you're dealing with in Vietnam, but Vietnam does not have a view of itself as a superpower. It doesn't see itself as engaged in a rivalry for preeminence in the global situation the way that China does. And China sees itself as a superpower. China would say, and it does say, well, we were a global power long before the United States was ever founded. We were a global power back in the 1300s. And in fact, what's happened is we've just gone through this rather bad period, but now we're going back to where we always were. We were for 1,000 years. And that's the more normal world than the one you've lived through over the last 100. And you know, it has a view of itself as with a long history and as a global power. And so it is going to engage in rivalry for influence with the United States. And that's why, particularly at moments like this, it's a little less reliable, because you might be dealing with an economic sphere, and you know, it decides it's going to build a military base in the South China Sea, and that becomes a real problem between the two governments, or problem between China and the United States. You get caught up in all that sort of thing. So in that regard, Vietnam's probably a better bet. You can stay out of that sort of rivalry. Other countries are probably better bets again, like Thailand, which is a democracy. Malaysia, which I would regard as a guided democracy, or maybe much more democratic now than it used to be. There's nothing wrong with China, but I think big corporations have come to the view that they've got to diversify, that they've got to have options. And also, if you want to deal with governments, if you want to supply to the United States government, for example, it's going to make sure that you have diversified supply lines, supply chains, because it does see itself as a global power. It is engaged in rivalry with China, and it's going to use its trade powers to actually advance its own position. So I don't think there's going to be a problem with importing from China, because, as I said before, they're only selling to us because they make money out of it, and it's in their interest as much as it's in ours. But I would think about a bit of a backup plan if this rivalry continues. That's good.
That's good. So we've got a lot of questions coming in. You don't mind if we keep you for an hour or so?
Keep going, yeah, keep going.
So a lot of our GDP is dependent on international travel, with tourism, education, and net migration, I think you spoke of earlier. So given the international travel restriction, and perhaps not being open for some time yet, will we be able to generate enough demand and consumption within Australia over the coming year or so, in light of the travel restrictions, to get Australia back to a growth position?
Sure. So here's an interesting question. When do you think international travel will resume? I can't see it happening this year. Well, it happens in this respect that you could probably come into Australia, but you'll have to go into a hotel for 14 days of quarantine. And, you know, no tourist is going to do that, obviously. So I can't see that opening up this year. I know I was speaking to one of the international airports that said they don't think arrivals will go back to the numbers they were for maybe 5 years. You know, that's a pretty long time. this will interrupt the student trade, undoubtedly. But as I said earlier, actually students, that's one thing that can migrate online. That's one thing you can do online. I think a lot more of it will be. Then you come to the question of migration. Migration has been fueling in Australia a lot of housing, a lot of apartments in the inner cities. I don't think migration is going to come back quickly. And that's why the government's going to give incentives for renovating existing housing, because they think to themselves the building of new apartments and new housing is going to fall off with the fall in migration. So I think that's going to be down for several years, actually. A lot of people still wanting to come, but the quarantine rules and the health issues, I think, is going to make it much harder than it was. So anything that's really dependent on that, as you said, tourism, education to a lesser degree, because it can go on Zoom or Skype or whatever, I think is going to be affected by that. And you're going to have to think of different markets. People, as I said to you before, I really think the days of escalating rents for prime commercial CBD office space and probably CBD apartments, that's going to have a big structural adjustment.
Yeah, that's good. I'll get Jonathan to run through a couple of questions in a minute, but you spoke about housing and the impact of some of those measures on housing and perhaps construction more generally, both residential and you might say the commercial and multi-residential level in terms of projects. Government's talking about stepping in. What would you say? So it's a pretty broad scope, but probably two questions in there. One around the housing market, residential housing market more generally, and what you think is going to happen on pricing there. Then also on the construction side, both residential and commercial.
Yeah, well, prices are going to fall, particularly in Sydney and Melbourne. And that is because people are going to be cautious with money, and because migration is going to be less. To be frank with you, an orderly adjustment on prices wouldn't be such a bad thing. Let's suppose prices come back 5%, 10%, something like that. It wouldn't be such a bad thing. Our real estate markets in Australia are really, really high. They're high by world standards. But I don't think there's going to be an unemployment rising. Let's suppose it rises to 10%, as I think it probably will. Again, that will affect house prices. But what will support house prices, of course, are low interest rates. You've never lived through interest rates as low as this in your life, because they've never been this low before. To have a cash rate of 0.25%, you can get a house loan now with a 2 in front of it. I remember when I bought my first house, the mortgage interest rate was 17%, by the way. Different world, different time. But whilst money's as cheap as this, and an interest rate is just the price of money, while money's as cheap as this, it will support the markets. There will be a downward adjustment, but I don't think it's going to be a collapse.
That's good.
Very good. Just if I can just take you back for a second, Mr. Costello, as when you were speaking earlier about trade partners with Australia, we just had a bit of a flood of questions around whether you could just give a couple of sentences on what you think of India as a trade partner with Australia. I guess largely for imports, but what are your thoughts there?
Well, the government's going to try and diversify to India. That's for sure. And India shortly is going to become biggest country by population in the world. The Chinese population is not growing that fast because of the one-child policy. So a lot of people think that India will supplant China. And it probably has in some areas like back office computer work. It's probably leads China. It has one advantage that quite a large proportion of the country speak English. English is the international language of commerce. So, you know, a lot of computer companies do development, back offices, call centers, all of that sort of thing in India. India is a democracy. You know, whenever you go to India, the first thing they'll say to you is, "We are the world's largest democracy." And that's just a way of them throwing off at the Chinese, you see. There's only one country that's bigger than them, and it's not a democracy. So they always say, "We are the world's largest democracy." It's their sort of selling point. But the flip side of that is it's a federal system. You have state and federal governments in India. You have a British legal system, but if you ever go to court, it can take 10 years. You know, it's incredibly slow, incredibly hard to argue disputes. A good legal system is very, very important. The best legal system is one which is so certain you never have to use it, right? You don't have to go to court because we all know what the law is. We can resolve our disputes outside of the courts because, you know, the legal system's clear. This is a big downside in India. The legal system is not clear. The court mechanism moves very slowly. If you ever get into a dispute with a supplier, very hard to resolve. India will see a great opportunity here, but its big downside is bureaucracy, complication, overlapping government. And it's got to deal with those problems, I think, if it really wants to take off. I've been involved in, you know, talking to Indian ministers about this. They have a great opportunity, but they've got to deal with those problems because it is hard to do business in India. Hard.
Very good. Thanks for the insight. Just back on the question regarding interest rates, there's just a few questions coming in around what you think the interest rate will look like moving forward. Obviously, we're at historic lows at the moment. How long can we expect that to stick around?
Well, so here's interest rates at the moment. The cash rate, which is set by the Reserve Bank, and that's the floor, you know, that all other rates work off, is at 0.25%. Right? So everything works off that. We've never had a rate that low before. The Commonwealth Government, which is a AAA borrower, since I got its credit rating upgraded, can borrow in the market at the moment for 10 years at 1%. So the banks will work off that sort of pricing. They'll add their margin on. You can get a mortgage rate probably with a 2 in front of it. How long will that last? That will last for as long as the Reserve Bank's cash rate is 0.25%. How long will that last? It will last for a while, actually. It will last until everyone's confident that we've passed this pandemic, that we've passed this downturn, and that the economy can sustain higher interest rates. It's not going to move higher anytime soon. Having said that, will I lock in? Well, I doubt you're ever going to get a better rate. than you'll get now. But I think these rates are going to be around for a while, more years, I would say. In a funny kind of a way, the fact that the rates are so long and they're still going to be low for a couple of years is actually a worrying thing, not a good thing, because it's telling you that we haven't moved out of the crisis.
I'm sure the fact we've got them for a little while yet will be comfort to those that leveraged on the call.
The flip side of this, by the way, is it's a very good time for borrowers. It's a very bad time for savers, right? That's the flip side. If you're in business, great, you could lock in very low rates at the moment. That's good for your business. If you've retired and you're trying to live off your savings, very hard to get a return at the moment. You'd be lucky if the bank could give you 0.1% on a bank account.
A lot of questions coming in around the manufacturing sector. Do you think the current conditions and to some extent perhaps the what's happening in Asia is enough to drive a sustained resurgence in Australian manufacturing and perhaps the bit of a buy local mindset, or is it likely to return to something more like pre-COVID levels?
I think governments, where they're letting out contracts, are going to be interested in having Australian components. I think there will be opportunities there in manufacturing. That's sort of more sophisticated stuff. I think at the low end, the making of nuts and bolts and so on, I don't think anything will change. You go to a Bunnings store at the moment, walk through, they're all full and they're all buying Chinese low value manufacturers. I don't think that's ever going to change. We're not going to go back to low value mass manufacture. But I think, on things like steel fabrication, engineering design, particularly where a government, let's suppose a state government's putting a tender out for railway carriages or something like that. I think they will be much more interested because they wanted to diversify their supply chains in getting Australian content. Not saying fully fledged, but I think there will be opportunities in those sorts of contracts for Australian content, and people will be looking to get more Australian content into them.
That's good. That's good. We spoke briefly about construction earlier, but obviously a lot on the session today have got ties to construction, and I'm thinking particularly of, you might say, the project level of construction rather than residential. So particularly commercial projects and the multi-res market. What do you think the outlook is there? Obviously, we're probably still yet to see a full impact from the initial stages of COVID in that market, but then what do you think the longer term outlook is?
Yeah, it's funny. Depends what you're building it for, I think. The inner city high-res apartments, which are sold off to Chinese students, I think is going to be affected because you're not going to have as many Chinese students coming into the country. I think the out of the city industrial, commercial might do well. I think, for example, I think there's going to be a lot more commerce done on the internet. The experience in the United States where Amazon dominates this area is Amazon is building huge warehouses and disposal areas to handle all of the goods, and they like getting those close to high density areas, close to big cities. And I think that sort of thing, with the warehousing, the logistics, is going to need a lot of warehousing, and it's going to be decentralized. I think there's going to be a lot of opportunities there as retail moves out of physical, what they call, you probably heard the expression, retail becomes more clicks than bricks, right? Retail goes online rather than in shops. I think there's going to be an opportunity. So these sort of things change the weights of where the economy goes, and it's a question of really being flexible enough, having a good, strong core business and being flexible enough to adapt it. For example, you've probably seen on the television, I think it was General Motors, one of the big auto companies in America started making ventilators. Not a bad idea in the middle of a pandemic. There were people that, were making medical supplies who started making, in this country, masks and what they call PPE, personal protective equipment. A good manufacturer that can be changed to a new product, I think, and is flexible enough to do it, will do well here.
What are your thoughts on the AUD currently, and what's the outlook for it, particularly pegged against the USD? Getting a lot of questions.
Yeah, well, see, the Australian dollar is seen as a risk currency. So, if there's a downturn, pandemic, war, people want to reduce risk, they'll get out of the Australian dollar. So the Australian dollar will always go down when people are trying to reduce risk. In the middle of this pandemic, the Australian dollar went down as low as 60 cents US, 50 pence. Now what's happening is people are saying Australia's coped with the pandemic very well. They've kept their debts to a little over 100, which by world standards is incredibly good. They're seeing a bit of risk on the American dollar. So the A dollar has moved up to 67. They're prepared to, come back into the A dollar. That's just what's going to govern the A dollar, risk on, risk off. As of now, people are a bit more confident, and the A dollar will start moving up. But the moment there's a second wave, let's suppose there's a second wave in Australia, or even a second wave in, even I think in the United States, it'll be risk off, and the Australian dollar will go down again.
Okay, we're also getting a lot of questions from Victoria, so we better give Ben the opportunity to ask what your thoughts are on the Victorian state government at the moment with the Belt and Road Initiative, the links with China there, and what you feel that poses a threat both economically and security-wise.
Yeah, so this Belt and Road Initiative, you got to go back to what it was. The Belt and Road, the idea, you remember Marco Polo, went from Venice across to China, and they discovered the silk, and they would bring the silk back on what was called the Silk Road, and it would come, through Central Asia to Venice. It sent it all to Europe. And the Belt and Road Initiative was an initiative to rebuild the Silk Road, but this time with 8-lane highways and big bridges, and trains, and so that China could export its goods back along the road to Europe. And so this involves massive civil engineering up in Central Asia, like all the Stan countries, Uzbekistan, Tajikistan, you know, all of those sort of countries. Now, Australia's view is, oh, that's all sort of well and good, but there's not a lot in it for Australia. And, you know, are these countries where China's going to build all these bridges and roads and maybe make loans to these countries, they're going to be able to pay back these loans? What happens if they don't? You know, is this a way of China extending its influence? So the Australian government has not signed up to this initiative. And the Australian government runs foreign affairs, runs the Army, Navy, Defence Force, runs foreign affairs. Lo and behold, even though the Australian government is not signed up to this, we have one state government that goes ahead and signs up to it. Why? Well, the state government obviously sees this as a way of ingratiating itself with the Chinese. Victorian state government's not going to be building the bridge in Tajikistan or anything. It's just a way of ingratiating itself, and it's the wrong thing to do. I mean, it's not up to a state government to try and get involved in foreign affairs and cozy up to foreign countries outside the national interest and the national position. It's just the wrong thing to do. And so there's a lot of queries as to why the state government in Victoria would have done this. What you know, it's cozying up to the Chinese government. What will the Chinese government want in return? A lot of legitimate concern, in my view, as to what this is all about and what it will require. And I think I'm right in saying I don't think that, you know, state governments anywhere else in the world have been signing up to this. This just seems to be an absolute one-off. And it's sort of very mysterious who advised the Victorian government to do this, you know, what their links with China were. And so I think it's a matter of very legitimate concern. And frankly, I just don't think state governments should be doing this. I mean, in Australia, state governments are responsible for roads, police force, hospitals. But in Australia, the federal government is responsible for external trade and foreign affairs. And this should have been left to the federal government.
That's good. You spoke earlier, I think, in your opening remarks about the Australian economy being in intensive care. The role of governments, both the state and the federal government, you might say, in weaning the economy off the ventilator. What do you think that looks like? Obviously, we've had here in New South Wales the fast tracking of a project in the Western Sydney Airport Metro. We're likely to see more of that. And where do you think the governments are going to be focusing their efforts?
Yeah, well, this is the, you know, I mean, this is the hard thing. How do you wean off this support? As I said, you know, governments might find that imposing the controls was easier than getting rid of them, because the moment there's an outbreak, people are going to say, or some people are going to say, or the media, a good part of the media is going to say, oh, you better put the controls back in again. Well, we can't. We can't. You can't live under those kind of controls forever. We are, as I said, we're going to have to live with this like we live with other viruses. We've got to be careful about it, but we're going to have to live with it. Until this virus is banished from the face of the earth, we have to live with it. We've got to be sensible, but we've got to get on with our normal lives. So weaning off the restrictions is going to prove hard. And as I also said, weaning off the government subsidies is going to be hard. That's going to be extremely hard because people are going to say, keep them going forever. what will state governments do? Yeah, I think state governments will look at projects. I said earlier, I think they will be looking to have higher Australian content in those projects. You know, if I were an Australian company, I'd certainly sell myself into those projects as being an Australian company that can have, you know, no contract has entirely domestic content, but they'll look for higher and higher things. So, you know, the infrastructure projects, I think, are going to continue. You know, the fast rail projects, the Western West Connects, Badgerys. Well, the trouble with Badgerys, or Western Sydney Airport, or as Badgerys Creek as it used to be called, you know, not a good time to be in the airline business. Western Sydney was going to be built, right, to take the overflow out of Mascot or Kingsford Smith. There isn't going to be much overflow in Kingsford Smith or Mascot for the next couple of years. That's the truth of the matter. Do you know at the moment Qantas is flying one flight between Melbourne and Sydney a day? One. They used to do, you know, just about every half hour and at peak, you know, every quarter hour. Not a good time to be in the airport business. So, I mean, I think it will go ahead and I think you can build the connections, but this will have put the Western Sydney Airport back quite considerably, I think.
That's good. So we've talked a bit, obviously, about the areas of the economy that are going to be hit hard and what some of the challenges are going to be. Where do you think the opportunities are for business, and what are going to be the areas that are going to drive, you might say, the recovery and the economy's return to growth?
Sure. By the way, the quarterly GDP figures were minus 0.3% for March, so that's the first negative quarter. We will undoubtedly have a negative quarter in June, so that's an official recession. It's the way the press will report those figures today. So what have we learned through all of this? You know, I sort of sit down and I try and think, you know, what have we learned, for good or for ill? The first thing that surprised me in all of this is you can do a lot more online than we were doing. You know, look at us now. We're doing this online. You guys might have used Zoom a lot before this started, but I certainly didn't. A lot of people didn't even know what Zoom was, as I said. We had some money in venture capital that was invested in Zoom. I didn't really even know what it was. A lot more can be done online. I think that's going to be permanent, and it's not just going to be meeting people, but I think a lot more business can be done this way. Invoices delivered this way. Accounting systems delivered this way, retail delivered this way. I think that's going to be a permanent change, and people are going to expect your businesses, I think, to be much more online, to be much more digital. That is the wave of the future. So I think anything you can digitize, anything you can get up online, that's going to be a good investment in the business going forward. Conversely, you see, because you'll do much more online, I think travel won't be nearly as interesting. So I'm a bit negative on airports, you see. Do we need all those flights going from Melbourne to Sydney on the half hour, on the quarter hour? Will they ever come back? And all of the people that also rely on that, the service economy, the people that drive the cars and the cabs. You know, I've got no idea what cab drivers are doing at the moment. I suppose they're all on JobKeeper, but they're certainly not taking fares anywhere. No doubt about that. And then you come to sort of knowledge-based industries, and knowledge-based industries, I think, can be delivered online. That's why I say universities and even schools to a lesser degree, but certainly universities. I don't think we'll ever go back there. And the shape of the physical world will change. As I said, you know, less shops and more distribution centres. That's obviously going to be the case. Government's going to have to think about public transport. The reason we can't open the economy and send everybody back to work is we can't get them all on the trains. That's the problem now. Because you can't socially distance on a train. The cities cannot cope with people returning to the office. And so the governments are going to try and keep them out of the offices for as long as possible. And, you know, that's the point I made about commercial office space. That's not looking nearly so attractive if governments are keeping people at home. So the nature of the workplace will change. People won't sit in crowded offices anymore. You know, banks were running to this system of hot desking, you know, where nobody has a desk, you all turn up in the morning, you just choose your desk. And the idea was if you didn't get there early enough, you didn't get a desk. So this is a way of getting them all to work quickly. Hot desking's dead. That's never coming back for health reasons now. So that's all changed. So there are going to be some industries that obviously going to continue. I mean, the built environment, people who are in construction, but it might be different built environment, different locations, different uses. And you've got to think about all of these things, how this will change the world. I mean, the thing that worries me is a lot of our people were engaged in what's called the gig economy, where, you know, you had a sort of side job. So you might be a student, you had a side job as an Uber driver or a side job as a barman or something. A lot of those jobs aren't coming back. And I must say, I think this fallout is going to weigh on the young more than the old. That's what worries me. I think disproportionately the young lost their jobs. And it's going to be hard to see where they come back.
What are your thoughts on how governments will handle this moving forward from a tax or tax reform perspective? There's a lot of talk out there at the moment of, you know, certain states abolishing stamp duty. Are we likely to see any changes to, say, GST, corporate tax rates, individual tax rates or concessions? What are your thoughts there?
Yeah, well, some of the states, New South Wales is moving down this path of exchanging stamp duty for a land tax, which would be a good reform, actually. So instead of paying a huge amount when you buy a new property, like a really huge amount, you'd just pay a bit more as a land tax, and you'd be able to buy and sell without that tax. And I think if you could move to that system, it would be a better system. You know, why is it unpopular? Well, yes, it depends whether if you're the kind of person that doesn't buy, you know, only buys or sells once in your lifetime, you know, you can have this annual fee. Okay, you won't pay when you buy or sell, but they'll say, I never buy or sell, I just got to pay it yearly now. But it would be a good way of going for the overall economy. Whether they can get that in or not, I don't know. I think people will look at the GST again, and there might be an effort to broaden what it applies to. You know, at the moment, there are whole classes of things that it doesn't apply to. I think they'll look at that. Business, particularly big business, is going to try and get company tax rate down, because at the moment, smaller businesses, as you know, are paying 25%, and the big corporates are still paying 30%. They don't like that. They want to get on the same rate. But unfortunately, I think there's not going to be much income tax relief for a long time. As I said before, deficits are going to be higher, debt's going to be higher, spending's going to be higher, so taxes will be higher. That's a bit depressing, I know, but I think that's going to be the outcome of this. I don't like it myself, you know, and in fact, I've said we ought to be cutting income tax rates, but I just can't see it happening anytime soon.
It's good. I think we're a bit out of time, but just two more questions if I can.
Okay, two more and then I better go. Yep.
Yes, very good. So just very quickly, the outlook for agriculture.
It's a good one. I think the outlook for agriculture is good because in this world, not only can Australia produce good, cheap agriculture, but it's a trusted brand. You know, you talk about new industries. Who would have thought one of our big industries in trading with China is milk? Why? There's a very interesting this. Why? Why are the Chinese so interested in buying our milk? Because they know it's safe. They don't trust their own government to keep the milk safe. That's the truth of the matter. So they'll pay a lot more for Australian milk, baby formula, all the rest. If you can hook your agriculture into an international market, I think over the longer term, because of our reputation for high quality, safe, well priced, you'll do well.
That's good. That's good. And final question, and we can wrap up. So you're treasurer again, and you've got $100 billion to spend on nation building infrastructure.
Yeah.
Do you build you might say a newer modern version of the Bradfield scheme to water down from the north? Do you build high-speed rail from Melbourne to Brisbane and connect the regional areas, or do you take another option?
You know what I'd do? I'd give it back to the taxpayers. I'd say, people, you paid it, you earned it, you have it back, you decide how to spend it. That's what I'd do.
Brilliant, brilliant. Well, that's been very good. We certainly appreciate your time. We appreciate everybody joining us on this session today. And a very big thank you to you, Mr. Costello, for giving up your time today. Thank you very much.
Thank you very much to Quantum Advisory. It's been great to be with you. Thank you very much.
Thank you.
Thank you.